Hi everyone, as promised, here is the first of the videos that's the solutions for the mock exam that you're going to be working through. So I'm going to break it down into smaller bits, so it's smaller videos. If you hear a lot of click-clacking going on in the background, it's because the dogs are around my feet and here, there and everywhere. But what I'm going to do is here, so question 1 is a 25-mark question, but it is split into two parts. Part A for 14 marks and part B for 11 marks. So this video will just be the 14-mark part A of that question. So you can look at it, see how it goes together and how it's constructed. So question 1, part A is about a profit adjustment for income tax. So it tells us in the question that Lee runs a vegan food business, and for the year ended the 31st of March, the income statement showed a profit of 19,560. So that's where we start off. The first thing we start off with is profit per accounts, and that figure is 19,560. Now what we have to do is we have to go through all of the information that we have and find out whether there's any income which shouldn't be in there or whether there's any expenses that shouldn't be in there. And then what we're going to do with them is less disallowed income and add disallowed expenses. So all we do now then is we look through all of the things in the list, and the reason I'm doing this is the question is next to the phone which I'm filming this on, and so that I can see it as well. And we go down all of those things on that list and we make an assessment of whether they're allowed or whether they are not. So if we look down that list, there is actually only one item of income on there, and it's bank interest received. And whilst that is taxable, it is not taxable here. If you think, we'll come to it later in the second part of the question, when we do the calculation, we have non-savings income, savings income, dividend income. At the minute, this bank interest received, which should be savings income in the second column, is being treated in the self-employed income, which would be in the NSI. So it will be taxed, and it will be taxed in part 2 of this question, but it is not part of this. In this part of the question, what we are doing is calculating all the NSI figure will be. So bank interest received is not allowed. Bank interest received is in the question as 250, and it is not in line on purpose. Now, we can actually finish this section off, but we will show why we do it that way later on. If we look down everything else in that list, there is nothing else in that list which is income. So we know that is the total for that figure. So we draw a line here, and 250 comes here, and we said it was less. So we now have 19,310. And then that means we can move on and look at all of the expenses and figure out which, if any, shouldn't be in there. So the first thing, and this is what I say every single time we do this, is you must take out everything to do with non-current assets. They are not part of taxable income. Everything to do with those is only dealt with under capital allowances. Oh, sorry, guys, there's a van stopped outside my house and I'm hoping it's not coming here, but I don't know. So we now look down all of the items here and we take out the things which will not be, oh no, the dogs have spotted the van. We take out all of the things which will not be part of non-current assets. So the first thing to look at is depreciation relates to non-current assets, therefore it should not be in here. Loss on disposal of asset. Should not be in here. So those are the two straight away which we take out in entirety, and those two figures are 1,600 and 400. They are done. Now we need to keep looking down that list to see exactly what else is in there. So the third item on that list, new van purchased. It says that was recorded as a non-current asset. Fine, that means it's not in profit and we can ignore it. It's a red herring. We will come later to what that is. Okay, so new heating system installed, recorded as repairs. So that item was put in the expenses and it shouldn't have been. And that figure is 3,500. Next, bad debts general provision. We've said in the past, general provision of bad debts is not allowed. When you just think one customer may not pay but you don't know who it is, that does not mean you can provide for it. You can only put it in as allowed expense if you delete the debt. So the general provision cannot be in there. Stop it. Out. And that figure is £950. Bad debts written off, that is out. Therefore, it can stay in. Get out. So bad debts actually written off, they mean the debt has been deleted. Therefore, it will not be disallowed, it can stay in there. Depreciation, we've done. Loss on disposal, we've done. Lee's wages, the wages that she takes herself, as a self-employed sole trader, that is not allowed. If it's a limited company, it would be, as we saw in our assignment, but it is not. So, we are told that Lee's wages are £180 a week, and that figure is 9360, and that is not allowed, so that would have to come out. Goods purchased for resale, that's fine. Motor expense, we are told a portion of it is not allowed. So, I'm going to stop this video and start again from where we are and get these pains out.